morning, ladies and gentlemen. On this Thursday, ya maandamano, and welcome to this channel. Thank you so much for joining me as we analyze what is happening in this country and all over the world financially, and what that means for us, even if you are an investor or just a common mwananchi, just going about your own business and doing your own things. Now, I've come across a very interesting piece of news that is crucial for all of us. And this is the fact that the CBK has raised the base rate for lending from 8.25 to, it's gone up to 9.5. Sorry, from 8.75 to 9.5, which is an increase of about 0.75. Now, what does that mean? That means that this is going to make the banks to increase their interest rates from whatever they are lending at right now, probably by a margin closer to that or even equal to that. So if you are being lent for at 15%, it's likely to go to probably 15.75 or 16% or something like that. That is for the banks, commercial banks, to decide. So why has central bank done this? Central bank has done this to try and curb the runaway inflation that is happening in this country. As you know that inflation as per last month in February had hit around 9.2%. And in January, I think it was at 9. So it can continue like that if it is not checked. And the only way they can be able to do that, to check, is to make the cost of borrowing to be a bit more expensive. And thus, what that does is that it makes the spending power of the consumers to decrease. And when that decreases, it causes the demands, the ability to buy goods and the ability to purchase stuff less. So if you have been affording to buy meat every day, with increasing rates, it means that now you don't have access to credit easily. You will choose to hold on to the money that you have and not buy. And what that means then is that there's less demand for that particular product, like meat. Let's use a meat, for example, less demand for meat. And when there's less demand for meat, that means that the guys who are selling the meat will have to lower their prices to try and attract people to come and buy the meat. When that happens, then as they lower the prices, because the demand has gone down, then eventually, with time, when that happens across board, almost all the products, with time, the inflation starts to come down. So, also what you probably need to know is that the companies that have been borrowing, that borrow for money for their own upkeep, it means that they cannot borrow now. They would rather use the money they have in the bank. So that means they'll have to think of ways of lowering the production cost and lowering the prices that they are taking to the communities out there, to their consumers, to try and attract more people to buy their products. Hence, the price keep coming down. So this is going to hurt for the short term, but for the long term, it will curb the inflation, the runaway inflation. Do not be fooled. The runaway inflation is a creation of external factors, in my own view. The Russian war, by all means, it made inflation to go high in very many countries because of the demand for fuel and all that, and now everything that happened around there. But in Kenya as well, the other factor that has caused inflation to go very high is the drought that has been there for the last few months, and causing people to buy goods from outside, food essentials, from having to import from Zambia and from wherever else that we are importing from. So it is a factor, it's a combination of two great factors, that and the strengthening of the dollar. Though that is temporary, that the strengthening of the dollar will also come down. It's not going to last for long. And also the fact that the Kenya shilling has not been doing very well against the major currencies, that causes a lot of inflation. One of the things that I think this country can do to make sure that it does not face what it is facing now in the future is to make sure that we increase our production capacity of things that we usually import, so that we're not dependent on the dollar and we're not dependent on imports to survive, for our own survival. We can produce those things locally. Number two, of which I think it is important for this country to do, is to make sure that we create policies that would favor our Kenya shillings when we are buying things from outside. Like what I read the other day, that we are going to be buying fuel using the Kenya shillings vis-a-vis using the dollar. That means that we are exchanging the Kenya shillings with for example, the AED, the AED, that is the UAE currency, when you are buying fuel from them. We do not have to go through the dollar system. That will work for us. But if we continue using the dollar system, whenever there is a turmoil in the USA, we'll keep suffering, like what is happening now. Inflation is running away in the USA. It is affecting us here in Kenya. But having said that, things are not that, gloom and bad. The measures that the central bank is putting in place are good, and I think they are important for the country, so that the inflation does not become too bad that we can't survive. Otherwise, thank you so much. I will be talking more on the same. That's just some information that I came across and I thought I should let you know. My name is Gishure Irungu. Please subscribe to this channel, like and share this video. Let's talk about what is happening, because if finances and life go together. Thank you so much and have a lovely day. Bye.